welcome to Trade Finance Talks. I'm Mahika Ravishankar, Deputy Editor at Trade Finance Global, and welcome to you today from the 2025 Cybles Conference in Frankfurt, Germany. I'm joined today by Dirk Beschek of Commerzbank, and we're going to talk a little bit about current trade flows and maybe future difficulties in emerging markets' access to trade finance. Dirk, welcome to Trade Finance Talks.
Thank you. Thank you very much.
So to kick things off, let's just have a few quick introductions. Maybe tell me a bit about yourself and your role within Commerzbank.
Sure, thank you. I began my career in public policy research in South Africa many years ago, and from there made my way into banking. And quite early on in my banking career, made my way into the trade finance space. And over the years, I've held roles in trade finance to do with analytics and strategy, with FI sales, and now at Commerzbank, the strategy function that I hold at Commerzbank.
So you were based in South Africa and now you're based here in Frankfurt.
That's right.
Would you say this international background has affected your approach to managing international clients?
Very much so. I've worked in South Africa, I've worked in London, I've worked in Germany, and all of those are wonderfully diverse cultures with their own idiosyncrasies, and of course that's prepared me to engage in the international space, in the international FI space, where people come together from various backgrounds, various regions, and I hope it helps that I'm South African, which South Africans are renowned for their friendliness, their engagement, so that always helps to break the ice in meeting new clients and working in different regions. Yeah.
Cool, so I'm going to probably gear the conversation now towards those different regions. And I read that Commerzbank has been operating for the last 150 years, so probably began in a time where the global economic order was dominated by a few European empires with tendrils across the world. Now it's completely different. It's economic blocks and trade policies which are constantly in flux. With this in mind, how do you support clients in navigating European trade?
So that's correct. So Commerzbank is now just over 150 years old. So it's seen the transformation from the first period of globalization that occurred before World War I and then died down in the interwar years, and then into the second phase of globalization, the order that we're used to today, the international order that we're used to today. And it's that international order, of course, that is increasingly coming into question now, that's being disrupted by events that are going on. But that disruption's been carrying on for a long time, and certainly since the beginning of the first quarter of the century.
So what's been the impact of all this geopolitical flux on Europe's trade flows?
Well, it's important to understand that Europe's trade flows have actually been evolving over a long period of time. And if you look at the Europe's trade partnerships as a relative share, the relative share they hold as import and export partners, and you sum that import and export number, you stack them up and you say, well, where do they have their relative positions towards each other? Those have been changing for some time. You may expect that, for example, the role of Russia as one of Europe's trade partners has gone up, and then as a result of more recent events, of course, has declined. The position of China, of course, has increased since China joined the WTO in the early 2000s. America has always been, the United States has always been a big trading partner. The UK was always a big trading partner, but it has declined over that time. So Europe's, they're constantly evolving, they're constantly in a flux, these trade patterns, but these are longer term dated data. The expectation, of course, is when we think about current events now is how is that impacting on Europe's trade flows? And at this stage, it's not that discernible in Europe's trade flows. If you look at more sensitive data, the month-to-month data, for example, the primary relationships with the United States and China haven't changed. They are still the dominant trading partners with Europe. But what you can see, for example, is that in the anticipation of the tariff regimes that we were anticipating earlier this year, you can see a blip in the data that suggests that exporters were front-loading their shipments across to avoid the impact of the tariffs as much as possible. And so very early in this year, you've got a distinct spike in the exports to the United States, which then leveled off again. So it remains to be seen then what trends evolve over time as far as these current events goes, what impact they will have on Europe's trade patterns. That should be the case is not unusual. The trade data that we look at are usually produced somewhat in arrears, so you're always looking a month or two behind you. And of course, the other thing to notice is while there's been much debate and much talk about the tariffs and the impact of tariffs, those weren't immediately applied. Those tariffs were discussed, they were put on the table, and then they've been negotiated and really only came into their own in August. So it's only future data, longer term data, that will show whether they have a distinct trend. This is not to deny, of course, that there are more immediate sort of localized data that indicate changes in trading patterns. So, for example, the Chinese customs data show that exports from China to the United States have dropped off quite sharply, but have increased, for example, into Asia Pacific or into the BRICS area, into the sort of emerging markets areas, for example. So you do get that, but as far as Europe goes, time will tell what effect that has.
Mm-hmm. Would you kind of say that the post-World War II order which was established is mirrored today, or are there new players coming into consideration, especially with regards to European trade?
No, the post. So what characterised that post World War II order, and the order we've kind of inherited, and we've all grown up in as bankers, is this global order, this multilateral order, an order based on global governance when it comes to trade, and that order has always involved all the players, barring a few exceptions, of course. So and that order has been evolving and transforming, certainly as long as I've been in banking, and it continues to do that. We're probably at a point now where some of those changes are going to accelerate, and everyone's aware of the tariff debates that are going on right now. That one of the key founders of that order is withdrawing from that order. And so we all expect those changes to come. Quite what they will look like, how significant they are, to what degree they lead to the en bloc mall, in other words, the formation of different trading blocks across the globe, that remains to be seen. These changes that we're confronting now, that we think about today when we think about change and disruption, particularly in this year, those changes are only beginning to manifest themselves now.
And from a banking perspective, how do all these changes affect how you support your clients?
Well, the challenge to banks, of course, and this is why we're here at Cybos, is to engage as banks, is to be able to support our clients through these many changes, through these transformations. And if you recall the period during COVID, one of the watchwords that came up during COVID was the word resilience. And I think it's important to kind of understand what we really mean by resilience, and what I believe it should mean for banks, of course, is that they are dynamic and they're innovative and they're responsive to clients. If clients are experiencing all these changes in the world as we expect them to continue, it's up to us banks to be there and to assist our clients to meet these challenges. Those are all very fancy words. What does that really mean? And I think this is the crux of the matter. It means very tangibly, it means being responsive in a technological way. It means being able to engage with new third-party platform providers. It means being open to making the digital changes that we're expecting to come through in trade. And it means being ready to employ new technologies like AI to speed up the efficiency and the accuracy of, for example, transaction due diligence. It also means that banks need to be ready to engage with new risks quickly and efficiently, make a decision on whether that's a risk they want to take or not, and on the basis of that decision, act. And the last point I think that's important for banks to be able to do effectively is advocacy work. Is to engage with regulators, is to engage with the governance structures that pertain to the trade finance framework overall, and to make sure that the side of the banks is heard, that the regulators understand the challenges that we work under, and that there is a complementary relationship between the regulators and the banks. And I think if the banks can get all of those things right, they can accompany their clients into into the new markets as they emerge in these trading blocks.
I want to talk a bit more about the word responsive, which you just mentioned. Is this responsive to client needs or responsive to your own understanding of the market, maybe even preempting the challenges that may come for your emerging market clients?
That's a great question. It's probably a little bit of both. In some respects, clients expect us as banks to exhibit a leadership function, to present markets to them, to manifest knowledge in those markets. And for global banks like Commerzbank, it's obviously very important that we have people in those markets, understand the culture, understand the regulation. So there is that. So on the one hand, there is the leadership function, leading from the front, that is expected from banks. But on the other side, there is also the drive from the clients themselves. So if you talk to many of the banks, and as we've been doing here, the digital transition is also to be driven by clients. If we push the digitalization of, say, trade documents, which is very much a current theme, there does need to be a business case before the banks invest in the infrastructure and the costs associated with this digital transformation. For example, there needs to be a robust business case. So it's a little bit of a kind of a dynamic relationship between banks and clients, and together, we'll evolve the capacity and the capability to enter new markets and to support each other. So banks rely on clients, and of course, as banks, we know clients rely very much on us.
And how about the relationship between banks and banks? Would you say interbank networks are important in these complicated transactions across more difficult to access markets?
Absolutely crucial. And again, it's why we're here. It's what Cybos is all about. The hubbub you see around you at Cybos, that's what it's about. It's about building those relationships. And how does that work? Well, banks, as you may imagine, they support each other. They support each other when it comes to trade transactions, to the actual execution of trades. They support each other when it comes to lending. They support each other in global markets. And of course, they support each other when it comes to the actual payment flows associated with trades and just commercial payments. So the bank-to-bank relationships that are crafted all the time are an absolute kind of foundation to the global order in that sense. So for a bank like Commerzbank, there's kind of two aspects, and other global banks, there's two aspects I should tease out a little bit. On the one hand, there is having boots on the ground, having that footprint network, and having that sensitivity to local markets. But associated with that, here's the real value, is around each one of those node footprints that you have, say in for a European bank, in Africa or Central Asia or South and Central America, for example, and across Europe and North America, is the relationships that you build around that node. It's the many banking relationships that you build around that node, and that's really the framework that enables international trade to take place. So it's absolutely crucial what we do here. It's absolutely crucial that we're building those relationships and keeping those relationships upright to enabling trade.
So are you talking about local banks within these markets, or?
Yes.
Okay.
Yeah,
what do those local banks look like? How is it to operate with them?
So for us, it depends. So banks. We'll talk about first world banks, for example. European banks. They will have particular relationships with banks in those local markets, usually based on where their trade flows are. And so it is for a bank like Commerzbank. We will partner European exporters into the markets into which European exporters export. Asia is obviously a very important corridor. Central Asia is Far Asia, Central Asia, Southern Asia are very important corridors for us. Africa is a very important corridor, and South and Central America is a very important corridor. And it's in those corridors then we have those local relationships with those banks. So those are the banks that will represent buyers and sellers and public sector institutions that engage in big infrastructure projects. Those local banks will represent those institutions. And those are relationships that we need to have. That's the relationship we need to build and maintain. And they're obviously endeavoring from their side to build those relationships with us.
Thanks. And finally, what are some of the most pressing challenges which emerging market businesses face in accessing trade finance?
Yeah, it's a consistent theme. It's been a consistent theme for a while now, of course, is as a result of these the transformation that's been happening at least since the turn of the century. I mean, many events that have changed the banking landscape very, very fundamentally. And as a result of that, the response has been the regulatory response, of course, has been to tighten up on the regulations. First, it was the 2001, the World Trade 9/11. You had the financial crisis. You had the European crisis, the European debt crisis, COVID, and now the invasion of the Ukraine. You've had a couple of key events that have changed the regulatory landscape significantly. And banks are continually endeavoring to keep up with that regulatory landscape. The consequence, of course, of that has been that risk has had to be monitored much more carefully. And so banks are much more careful about the risks they go into and how they take it, how they manage that risk. And that impacts often on emerging market banks. So the challenge to banks, of course, is to be able to manage the risks within those emerging markets according to the new regulatory frameworks. Understanding those regulatory frameworks, applying those regulations tightly, ensuring transactional due diligence, and maintaining relationships that they can understand the risk associated with. And that's really probably one of the most important challenges for emerging market banks is to make sure that their risk is well understood by banks like us, and we manage that risk.
And let's imagine like a near utopia where banks perfectly understand the risk and everyone knows all the regulation. What do you think is going to be next?
I think that the next is going to be the impact of that digital revolution, because that's where I hesitate to use the word, but it's an important one. That's where the uniformity of the criteria, the transactional components becomes so important, because if we have that kind of uniformity of what goes into a transaction, then the ability to manage the risk, to predict a transaction, to manage that end-to-end risk of a trade transaction is, of course, much, much more pronounced. And that will give everyone the confidence around that transaction and to execute that transaction. So I think next steps is very much the impact of digitization on transactional due diligence. I think that's where our journey is going.
Thanks a lot, Doug. It's been a really interesting discussion. Yeah, thank you for joining me and enjoy the rest of Sibos.
Thank you very much. Yeah, thank you.